Welcome back to the channel. Today I've bought a new stock that I've added to the portfolio that is actually my first US stock that I have added. Now this is part of a change that I'm making, transitioning from purely UK stocks and equities and moving to a more balanced approach. Now this is to reduce a form of patriotic bias in which I was very much exclusive to the UK markets, but at the same time I also feel that this is probably a good time to be entering the US markets as well. But today I'm going to be talking about the stock I've bought in the United States, why I've bought it, and my concerns with this stock going forward. I figure it's a good idea to journal down the ideas for why you bought stock and why you dislike the stock as well, so that when you review it in future you're like, okay, yeah, this is what I'd written, I'd like this, oh, I easily overlooked that. Now the company I have invested in is big tech, and it's one that I use very, very frequently. And in fact, if I really think about it and scale back over the last few years, it's incredible how much I have used it, because it's pretty much my primary source of information. Now if you could guess from that, you probably already know, but I've actually bought shares of Google. Now Google has been over the news a lot lately, and this is because Microsoft has bought ChatGPT, an AI tool that they're now going to integrate with their search engine, which is Bing, and they're hoping to claw some of the market share away from Google. Now Google, as it stands, has a very, very strong market share, talking 90% of search engine market share, right? And Bing is about 3 to 4%. But the problem is here for Google is that even if Microsoft gains one customer at a time or one new user at a time, they will be taking it away from Google. And Microsoft have plenty of other ventures that provide them substantial sources of income or even cash flow. So it means that Google has got more of a threat from this alone. So it is a concern, and likely so it has led to a reduction in the share price. Now I've been watching Google for probably about half a year now, and I've been getting a little bit too greedy. I was really hoping it would drop down to about $75 a share, and I thought, you know what, it's gone up a bit. And I'm thinking, I do like the quality of the company, and my portfolio is in dire need of some diversification. Mainly because at the moment I hold two retailers, one primary high street retailer, one more of an online retailer. I also hold the London Stock Exchange Group, which is a financial institution that provides a lot of data and analytics, but also generates revenue through listing fees. I felt I needed another package here to really flesh it out. I'm also eyeing up two more stocks in the United States, and I'm going to be adding a few more. The idea here is that I'm going to be getting about 5, 6, maybe 7 stocks, and at that point I think I'm going to have a nicer portfolio, and I can sort of distribute the cash as and where I need it. That said, I'm not really building these positions up to an extreme level just yet. And in fact, if we take a look at my portfolio here, you can see that whilst it's down in the last week, you can see that my position with Alphabet is very, very small. I'm just easing my way into it at the moment. I'm in no rush to build up a large position, but instead I'm just going to chew away. I'm just going to take little nibbles here and there and buy a little bit more and build up this position over time. I do like the company of Alphabet, and that's exactly what I'm going to be talking about now, and that would be why I would build up a position in this company. Now, firstly, if we talk about really my opinion of the company, Google is something I've used a very long time. In fact, it's become a verb for me, where if someone goes, oh, I wonder what this is, I wonder what the average age of a walrus is. Now, that's a really dumb question. I don't know why I've come up with that. And that was the one thing I had on the spot, and I came up with that. Well, I'd be like, okay, yeah, Google it. Go search it up, or Google, right? And I've had such a ingrained view of that in my mind. And I've used other search engines as well, like DuckDuckGo. I've used Bing, and I'm not a fan, if I'm honest with you. There's something about Google's UI, the interface, how smooth it is. Yeah, sure, it's overloaded with ads, but I use ad block anyway, so it doesn't even impact me. Obviously, this isn't great for them if they're trying to make advertisement, obviously, revenue, but the point stands, right? I like Google for its interface. It has a very good universe of goods as well. Now, I'm an Android phone user, and obviously they acquired Android probably over a decade back now, but when they integrated it with all of the other stuff and really merged everything together, I felt it delivered a very good package. Now, I find here with Alphabet, they do have obviously their office related products, your Google Sheets, your Google Docs. Ultimately, I think they are inferior to that of Microsoft Excel, Microsoft Word, PowerPoint, etc. But for the everyday user, I think they really hit the needs that are required. I mean, the only reason I would disagree with Excel is because Excel is incredible to use and Google Sheets is just a bit flimsier. Pivot tables on Google Sheets, not my thing. But that said, Microsoft do charge very high fees for these services for business use, so there could be some competition that Google could draw away there. They've also got quite a large portion in cloud, which I don't understand too much about, so I'm not really going to talk about too much at the moment, but I'd like to learn more about this area because I do think it is something that can grow over time. But I'm not going to pretend that I understand everything about a company when, quite frankly, I don't. But the idea here is that I'm going to carry on and try and learn more where possible. And it's kind of important here. There was something I held off from buying Google for a while, and that was because I make income through YouTube, obviously being owned by Google. Now, YouTube is something, it's actually the only thing I use to watch content at all. I don't watch TV. I don't watch TV series. The only change is if I might watch the occasional film, and that might be Netflix. Aside from that, I use YouTube for all of my online content purposes. I don't use social media aside from, as I say, YouTube and maybe Twitter. So I'm pretty much at a case where this is the primary driver of my life. And because I make an income through obviously YouTube, I always felt, well, if YouTube's doing badly, the advert revenue through my YouTube channel is going to be quite poor, and that's going to impact me even more if I hold shares of Google. That said, I don't plan on making, because my income stream with Google is so low now, I don't think it's too much of a concern. And if I plan to have diversified income streams, I may have some ad revenue through my YouTube channel, but then also have my own career elsewhere in finance, in which case I'm happy to be owning shares of this stock. Now, they've got an incredible moat. I have been talking about their market share, but as I say, it has become a verb, as previously mentioned. Now, when we actually look at the financials, I do really like Alphabet. And if we go onto here, this is actually one of my concerns, but I will come back to that in a second. When we look actually at simply Wall Street and we look at the financial health of the company, let me just drag this one over here. And we look over here and we can see, can we see that clearly there? Just drag that one over. We can see here that they've got minimal debt, plenty of cash. We're talking a company that's nearly $114 billion in cash on the balance sheet. They're worth 1.2 trillion, right? So it's about 1/12 of obviously what they've got. That's a good cash position, low debt. I already love it. Then obviously when you look at their past performance as well, you look at their overall cash flows, their earnings, their revenue, it's high profit margins, they've got good cash flow at $60 billion a year. So at the moment, the valuation I think is fair. Now, I do think this is a very quality company, and at a 20 times price to earnings, and it's about the same for their cash flow, I do think that's a reasonable valuation, and that's why I'm just nibbling in now. If I hadn't have been so greedy and tried waiting for a further discount in the stock, then maybe I would have bought more at $80 odd a share when I was following it quite closely. But at the end of the day, I'm happy to hold a position because I think it's a quality company as mentioned. That said, there are some potential concerns I'd like to address. So one, they've had quite a high spend on their other bets. Now, everyone talks about this, and again, this is something a little bit out of my depth, but from what I can tell, or from what I've heard, it doesn't seem like any of them have truly played off as of yet. So what it's saying is that Google's main source of revenue is their search, realistically. And from that, obviously, they're investing a lot of money into these other bets that haven't yet provided enough value to justify this investment. Now, some of the short-term investors might go, okay, well, if they cut their spending on other bets and they absolutely ravage their employees and fire a load of people, then this is great. This is easy cash flow. But long-term, they've got to be looking for an alternative source of strong income growth, or let's say revenue growth as well. Like Amazon, with their acquisition of Amazon Web Services a good few years back, that's now driving a lot of what is behind Amazon, rather than just being an online first-party and third-party retailer. Again, there's another concern here, and that's Google's headcount has been increasing dramatically. So let me just go back to Simply Wall Street, because I haven't actually got another graphic to show you this, but we can see the number of employees over the last few years. Since the end of December 2019 was at 119,000 employees. At the end of 2022, it's 190,000. Now that is increasing dramatically, and especially when you consider the high annual average salary of each employee at Google, and you actually look at the business model where in reality, a primary source of their revenue is a search engine. Do you really require 190,000 employees to fix that? At the same time, I do appreciate that they are making some layoffs here and there, and they are looking to reduce this because they do have an activist investor that's certainly pushing them to do so. But at the same time, this is ridiculously high, and quite frankly, the layoffs they've made so far don't even make a dent in how much it has grown over the last few years. The concern really isn't with the number of employees. I do understand that obviously their expenses are going to be higher because they have more employees, but the problem with more employees is that their stock-based compensation is increasing as well. Their stock-based compensation at the moment is ridiculously high. And we're talking in 2020, it was 13 billion. Now in 2022, it's 19.3 billion. Now, if you remember when I was talking about Simply Wall Street, and we were talking about the free cash flow of the business being about $60 billion per year, that's 1/3 of their free cash flow going away as stock-based compensation. And in reality, I think maybe that is quite high. And I think that's a concern as an investor who wants to see a return on their investment. They don't want to see money kind of leaving the company in that regard. And so that is obviously a concern going forward. And we've also got the likes of YouTube, which has been deemed to be struggling a little bit at the moment. And obviously there's fierce competition from social media channels such as TikTok. TikTok's short form content could become the mainstream norm. And in reality, these new younger generations might not have the patience to watch a YouTube video that's 5 or 6 minutes long, and they might just scroll through TikTok. Have you seen those videos online where there's like kids and they're playing like a game on one of the phone, and then they're scrolling through TikTok on the other one, and they look ridiculously bored, and they're still doing like two things, loading themselves with dopamine. It's unbelievable. And we've also got the likes of, and I do appreciate that Google has their shorts, but I don't really think it's doing that much of a dent really into what TikTok is, and even Instagram Reels has some of a drive there. But Google is very reliant on search, and this is where Microsoft does pose a threat, as I've mentioned earlier, because it puts a lot of pressure on Google to be innovative and to stay ahead, because ultimately, because they have that large market share in the first place, it means that Microsoft only has to gain a few here and there of their users. And as I said earlier, this is a concern because for Google, that's their main source of revenue, and they're seeing their market share decline over time. Probably not for the best. But that said, I think Google is a very resilient business, and I think Google search is not going away anytime soon. So realistically, I think this is a business that is discounted quite heavily at the moment. I do believe in the future Google will continue to thrive, and I do think it will still be around. I think at the moment we're really underestimating their incredible moat, and I truly believe that Google is going to put up a significant fight in terms of search engines, and I do think they've got a lot going for them. That said, I'm going to try and remain as neutral as I can on the company, given my exposure to obviously Google Chrome through my Android phone, and just keep realistic. As I say, I've been documenting my ideas here, my concerns, and also the reasons why I've bought, and hopefully you can see that in this video too. And if you have anything, let's say, that you disagree with in this video, because I'm not claiming to be incredibly knowledgeable on Google, in fact I'm far from it. So if there's something I've missed, then definitely drop that in the comment section down below. Thank you for watching, have a fantastic day. Oh, and as a quick update, by the way, you may have noticed that you haven't seen my spreadsheet on this video. I'm actually updating it in Microsoft Excel, and I'm hoping in the next few weeks to have a much better spreadsheet which I can share to you. So keep an eye out for that, and that's why I've been using Free Trade Web at the moment.